All right, we are live. We are live. Hello, everyone. I think you are listening my voice now. We are live here on FS Street. Welcome, everyone. We had a little technical problem last session yesterday, but today we are live and alive and kicking. So welcome, everyone. I'm Todd Pantelis, Wayne, FS Street admin. Good morning to all. Dion, IBY, Lebe Lopez, DZ, BW, John, and Mr. Carrillo. Thanks for joining. Mark, Adinda, Pan, Pantelis. Hi, Todd. All right, so welcome back. Today's going to be a packed session because we have to recover what we didn't cover yesterday. So it's going to be all charts. Welcome to the FS Street Tokyo Open Live Room. This is a daily show where we feature real trading at the very heart of the Asian session with Giuseppe Basile, also known as the FibStalker. This is a daily show for anyone who's joining for the first time. Hello, Pantelis. Hello, Marco. For those of you who are here for the first time, I keep receiving email and traders and traders who, simple people who want to become traders. They write to me and I redirect them to the FS Street Tokyo Open Live Room, 7 p.m. to 7:45 p.m. EST. As you know, I take risk seriously. This is a business, and if it's not a business for you yet, it's going to become a business for you. And any business, serious business that lasts more than 3 or 5 years, that's the threshold there. It takes risk seriously, any kind of risk. And this is a very peculiar kind of business when it comes to trading because we are paid for the quality of our decision. And managing risk is a very important part of those decisions that we have to make. So trading Forex and its derivatives, futures, options, and CFDs, and other instruments with retail off-exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review the FS Street risk disclosure on the website. The information, including the commentary and trade ideas that I provide in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. All the information I provide here are merely provided for your general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated, and FS Street will not be responsible for any losses incurred on investment made by attendees as a result of any information in this webinar. And you can read the rest. This is the standard disclaimer when it comes to risk. All right, so you know about the time change. Let me say hello to you, and then, and then we get right into chats. Hello, everyone. Thanks for joining in. Thank you. And let's get into our charts here. It's a lot to cover because yesterday we didn't have the opportunity to cover, we covered very little here. All right, so let me start from the SP 500. Everybody is excited about the stock market. The stock market continues higher. In a way, we had anticipated that. So this market actually has traded the first extension here, participation within the 1885, 86, down to 1874. That level was never pierced. Market got into the first target, profit taking, and second target, profit taking. And then the market had a continuation higher here. How we model that? Highs to highs. We discarded the little break that we had here. Why? Because we had this break on the day of the ECB, when one way or the other, Mr. Draghi again was capable of talking the euro higher after announcing a massive QE, he managed to talk the euro higher. Now, there are a lot of consideration we can do on that, and we'll do them later on when you're going to review the SP 500. The euro. But when it comes to SP 500, as you can see here again, market got into that participation in this area, got again into that first target, a little profit taking, you can see that. And imagine when the market stopped, second target. So how do we model the next measure move in this market? If this market continues moving higher, it's going to be a next extension. And I'm going to trace from here to highs. And let's see whether that level holds. Okay, if it holds, hi everyone, hi Mishar. If it holds, we're going to see higher prices, and this price, when we look at the general development on the market here, that, and I'm not gonna do the analysis on the weekly time frame, but you know very well that the weekly time frame has held price here. We never broke below the 1797 level, which was our important level that algorithms on this market were looking at. And triple tops are not really very common in this market. So either we see this market retracing here, or you can kiss goodbye the previous size, because this market is going to move into 2200 and potentially even higher. Okay, so very interesting here. Excuse me, not still a point where you wanna short this market. I have some colleagues and friends who actually are building their ETFs position, double pair. I believe it's not yet the moment to do that. This market could move sensibly higher, but I never assume anything in the market. I want the market to show its hand to me. And here again, I'm going to give you these very clear levels here. If the market breaks below 2012, we are going to see a potential retrace in this market. But what I anticipate is there is a continuation higher so far. If this market, and when this market is going to eventually retest this 2017. This is not a short here. I'm just saying that if the level is tested, we will get interested and involved in longs. All right. And I want to mention the silver as well. We know that silver had to do some catch-up work on gold. There are a lot of people who are seeing gold or silver at lower levels, but algos do not lie. What we have here, we had a participation of 1485 a few days back. This was the beginning of March here. This area held. Yes, there was some forth and back here, but the low has held and is now pushing price to previous size. Right there, right at 1660. Okay, and more interestingly, we also actually have observed an inner measured move here, which is visible on the daily itself. And again, the market was actually capable of holding that area. It tested 1, 2, 3, 4 times here, and then eventually today continued higher. So. And as you can see here, the market went very, very close. I would say it has hit that 1611 inner targets here, and so we can happily say here that the inner measure move has been completed. Hello Marco, hello Joe, welcome. And we are celebrating here the move higher in silver. I see that there is a growing list of gentlemen here joining today. Joe Pantelis, Nas, Pankai, Pan, Hi Pankai, Adinda, Jax, Mark, Mishari, Mr. Carrillo, Marco, Wayne, Join, BW, DZ, Todd, Lebel Lopez, IBY, and Dion. Thanks for joining in. So what can we anticipate in this market then? I just anticipate a continuation higher, okay? A continuation higher to hit 1662. As you know, we manage risk when we trade this 50% level. We let the market move. And I believe that the next example I'm going to show you is a proof of this. I always mention that 80% of the gains come from 20% of the position. If you let those position move, and ladies and gentlemen, let me introduce you to the New Zealand dollar. We have been talking about this, and sometimes I've been fighting, some negative comments about this market. But just to refresh your memory a little bit here, and my memory as well, but let's not forget that this market has traded a 50% weekly long. Not only it has traded it back here in October, and we're talking about a few months here, but when we make this review on the weekly time frames, when we make the review, we have always to start from the larger time frame, because that larger time frame sets usually the path of least resistance. So we wanna trade in the direction of the path of least resistance. So that's not the only analysis we do, because then we repeat this analysis on the smaller time frames as well. But what we saw here, 063.70, as this area has seen participation from weekly long, and the magic happened really towards the end of January here, when this level was retested on the weekly, and there was again participation. I mean, when the market came back to this level, people did not just close their longs and get lost, right? They didn't get lost. They just closed their position, and they didn't close their position, but actually they added to their position. And sure enough, there were some people who were unwinding their position, but the longs that came here into this market were enough to cover those people who were selling, okay, because they were exiting when they saw this level being retested again. But more than made for that, and actually the longs that participated at this level were big enough to cover those those sales, and plus push this price higher again. And then we observed on the daily time frame that we also got a signal and a trade that would actually support a continuation high. That happened at 065. We knew that level with 1, 2, 3, 4, 5, 6, 7 days, 6 days in advance. And and you have the testimony of a lot of people who have taken that trade. And then the pain became the pain came and started, because initially this trade worked well. We knew already the target. The target has been touched today. Today. But before we got into the level, look at the kind of pain that this market has actually created to us. Now, it is really no pain, because if you use some of the techniques that I use, you actually enter and use the risk-free concept. What is risk-free? You enter and you exit half of the position once your gain equals your risk. If you exit half of it, it is true that you have a smaller position to bring to gains, but to profit targets, but you gain the freedom of sleeping well and letting your letting your position do whatever it has to do. Because if there is one thing that we can say about the market, is that we don't know what the market is going to do next. Any assumptions on the market are deadly wrong. Never ever do assumption. And I had I heard some of the participants doing assumption on this market. It should go up or down. I mean, we just follow what the algos are telling us. And of course, the occasional viewer might say, well, Giuseppe, I mean, this is okay, you're good, this is all luck. All right. And what I invite you is to do your own exercise and apply this kind of simple models on price, which is a 50% retrace in this specific case. Of course, there is more to it, but you'll see that this kind of signals work very, very well. To make a long story short, it is true that there was a lot to bear in this market, and we also know that once this level trade, especially on the onset of a weekly level, of a weekly setup, this market can go laterally for a long time. However, again, the the participation. The participation here, when it comes, it gives us also the profit target. And if you obtain, as we often do, a risk-free trade here, you will have the benefit and the privilege to stay with this trade once it is free and wait for it to get to target. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18, sorry, 17, 18, 19, 20, 1 and 2. So we basically, it was a month, it was 22 sessions. It was a full month for 300 pips. Now, if you look at this in hindsight, it's very easy to do consideration. But the market could have gone to target here. It was just only 30 pips from that target, or that market could have gone to target here, right? So that didn't happen. But do you know what is going to happen to the market? No. And this is not, in this case here, it's not a typical case, okay? Typical case is that there is strong participation. But anyway, I mean, I have to congratulate all those who actually have stayed with it. I think Barker, one of them. I think Craig, I don't know if Craig is here, but is another one. So guys, congrats, and that's the way to go. So I will always keep saying that you know, the 80-20 works for trading as well. 80% of the gains come from 20% of the trades. And the next trade that I'm sure was on your radar as well, was certainly on mine, because I've traded this. And actually, this is quite funny because on yesterday I had a webinar, a premium webinar on FX Street, and you know, I've been commenting some of the long-term charts for a quarterly review. And actually, you know, the signal here, I mentioned this signal when it was happening. The second test was happening at the US Open. It was 8:30, after 8:30, and that's what we got here. And again, this market requires, again, for the non-believers, it requires, you know, an analysis here. This market has in the past traded the highs to lows, and that highs to lows got participation there. So as the market developed, that level was still there. And one consideration was, okay, what happens when the market gets there? Would be rejected again, or is going to break the level? Now, when the market was getting into the level, right, and this is a weekly chart, we're talking about several months here, but again, I do the analysis continuously on all the time frames, okay? And my question there was, okay, you know, this is extended. If this market has to continue higher, at least he has to respect this level here, okay? And this market printed a higher high. I don't know if you can see that, but let me make that bigger for you so it's easier to see. And I'm just trying to show you my reasoning. You know, when we have to deal with the so-called hard right edge. The hard right edge, the right edge is this edge here, is the right edge of the chart when we don't know what's going to happen next, right? And, you know, we printed higher highs. That's what happened. We had this level several weeks in advance. It was there. I never buy blindly that level. I always test these levels and have a technique which is called FibStalking timing to do that. But after 1, 2, 3, 4, and 5 week, 6 week, the 6th week we have tested the level. Now there were only two possibilities here, okay? Either the weekly participation short was strong enough to break the back of the bull, or the bull were capable of picking this price higher, picking this price from here and pushing it higher. So that was my question when I was there. And I didn't know what was the outcome there. If anyone comes to you and say, yes, it's going to go up or it's going to go down, you turn the other side, and my suggestion is that you run fast, because, I mean, I'm not saying that I have all the information, and I'm not saying that, I always represent what I do, and I'm trying to, steer you in that direction as well. And I'm not saying that, I always know or I always trade in the right way. But in this specific case, my question was, I simply don't know. Okay. And what happened is that the bulls, initially they were kind of losing, losing their way here. I mean, the bears were really pushing, but then eventually what happened is that, there was a clear participation in this area before the 1872 was broken. And the rest of history, this market went into the first target, profit taking there, and then second target, after a lot of time, second target. And now, the weekly bear are gone there. And we just have to understand whether this market is going to continue higher. And, if it has to continue higher, I mean, the bulls have to show continued support here. And now let's look at what happened here. And I think you know this because, this market initially was supported the bull. Incidentally, right at that 137.54. And then what happened is that, they pushed here, they held a little bit, and then bam, they broke the back of the bulls. Okay, it ends there. Now, why I'm saying this? I'm saying this for two reasons. One, I want to introduce the fact that once that happened, there were already a group of bears that were pushing this price lower on the smaller time frame, which is the daily. If this is the weekly, the smaller time frame was the daily. And that helps us a lot because it allows us to actually keep trading this market and keep trading this market now in the direction it is down. And this chart also allows me to tell you what I believe is going to happen here. Believe it or not, when I was looking for this long, very well, I was looking for 158 in this market. Once the bears have broken the back of the bulls, so to speak, here, that I'm looking for 120. Believe it or not, eventually this market will get there. But the question is, okay, all this information, but how do we take advantage of this? Because this is the whole point of it, right? If we cannot take advantage of this, and you will remember that in the last few sessions, we actually model this market. We model this market with this measure move here, first and second target. And what was the next measure move? Don't lie, I showed this well in advance, indeed with 1.5 days in advance. The market has been very, very fast, but not fast enough for us to not take advantage of this opportunity. Okay, and I'm sure that there are several of you who actually have noticed that and who have taken an opportunity to trade this market on the short side. So this short side is coming for two reasons. One, because weekly is not longer interested in pushing this price higher, and if there is no larger time frame pushing this higher, there is, on the other hand, the smaller time that is clearly pushing this lower. There is no other there is no other direction this market can go, right? Not only that, this market has also already hit the first target, 130.60 here. What is going? It's very, very close to that second target, okay? And I'm sure that I have some people there. I would be very surprised if Bankai would have not traded this short, or anyone, any others who. So Bankai, tell me the truth. You will tell me that tomorrow morning as well. But I suspect that you're able to capture this. Anyway, this was telegraphed to us. Really, this is almost an email to us. I mean, we knew that area. Not only we knew it, but this is not rare, but this is a gift, because what happened is that when we look at the smaller time frame, the market has actually tested this level before. He has tested it the previous day, and actually it has given the confirmation the next day. Bought at the hi Pankaj, bought at the at the US, but at the US, and the second one is the US. So this is one of those situations in which it's clearly it's an opportunity that is very, very clear and low risk. And the way we trade this kind of opportunities is always studying the sequence of measure move. In this case, studying the sequence of measure move as the market moves higher. And when that sequence fails, that's when we get involved. Okay. And here there was the market moving to first and second target, and then there was a failure, the next measure move, and there was the indication for an entry there. Okay, against a bigger level, a daily level short here. Yes, I got on the last retest of level just after news from Canada, and I did for overnight. Very well done, Pankaj. I take a finished trade, and then I'm not at the desk, and then stopped. That's unfortunate. So the stop was on the next retest, right? Which was slightly higher. It was high 134.01, and the other high was 134.04. Okay, so I had one position with a slightly higher stop, and I brought it to. I didn't bring it to targets. I brought it to the short-term target, the 132.03. Okay, so what to anticipate next? Because we need to know what we are going to do next in this market. Okay, so first of all, we're going to wait for this market to. That's unfortunate market, but it's not a big deal. If you participated again the next day, you'd have been in without a stop. So if you had participated at the US Open, you would be in with a finished trade. So what we anticipate in this market, 128.80 is the level that we are going to anticipate in this market, and after that, this market will continue moving in extension. Where would we believe this market is going? 120.50, and if you are in this trade and if you're short, probably you can go. What you can do, you can also keep this trade, and it could not be. I mean, it's not impossible once we break this level to actually see this market continuing lower. Now, this level here is going to be, it's a previous low, so there's going to be people who are going to take profits. There is a profit level as well, and there is an additional reason for seeing a bounce in this market, but that bounce could be as small as the next extension chart. All right, so that's the key for you to trade this market as we continue into 120.50. Let's continue here. Australian dollar, US dollar. Also, I had some, I think some people believe that this market would continue lower. Well, this market was very, very technical as well. It just went to trade to the level that we indicated. And the reason why that level has traded, and we had that rectangle there, is because simply, there was the natural prosecution of this trend. 50% traded here. First target and second target hit. The market continued above the second target, but then eventually we always know that if the next level trades, that's what we want to trade. So where this market going? If you're in a long, keep your long. This is an extension. It's going to go to 0.76, and very probable, I believe, it's going to touch 0.78 here. Okay. So if you're in a long in this trade, by all means, stay with it, because I personally believe that this market is going to continue higher. There's no reason to believe that it's going to stop here. Now, that said, as always, we have to check what the dollar index is doing. And you know very well that what I mentioned in the last few sessions, that this market had to, it had a bearish setup here, bringing price into 94.11. However, always keep the big time frame in mind. So what's going on in this big time frame here? Look at what happened recently. It is true that this market on the daily has been pushed lower, and this is also visible on the weekly here. And the right trace is this one. This is the dollar index, guys. Okay, you understand that the dollar index is, in this case, this is the dollar index futures on IC, and you understand that the dollar index is an index that is created out of component currencies, and the euro is 63 or 67% of the dollar index, which means that if the dollar index moves lower, the euro dollar moves higher. But what is important to notice on this chart is that this dollar index has been trading, has been respecting an extension along 94.30 for 1, 2, 3, 4, 5 in the last year, basically. Now, who are we to say that this 94.30 level is not going to be respected again? Who are we? Who am I to say something like that? I don't know. I only know that this level has been respected in the past and could be respected in the future. So we really don't know. We really don't know that. Welcome, Fame One. And this also suggests us that once that target gets into this first target, which is, within this area, we could get a reaction. Okay. Now, do we know that? Can we bet that the reaction is going to come? No. But can we bet that this level is going to be pierced and this market is going to continue lower? I would say no as well. We don't know that. Okay. What we know is that this level has been respected in the past, and there could be still a consensus from traders, professional traders, algos, professional traders, smart money, big hedge funds, to keep this dollar index keep bouncing here. Okay, we don't know that. Now, if that happens, of course, the euro dollar and the Australian dollar and so on, all these other, all the major that trade against, the currency that trade against the US dollar would obviously be impacted. But we don't know that, and I'm not the first one making that assumption. In fact, all my trades are trades where I try to maximize the opportunity to get a foolish trade. All the rest I let the market do, because I don't know what the market is doing. Which brings me back to that point that I mentioned at the very beginning of this webinar. Risk is all. If you learn to manage the risk, you are halfway, more than halfway, to become a successful trader. Because otherwise it means that you systematically make assumptions about the market and where price should go. And if you do that, you put yourself in a very dangerous spot. So let me tell you, that's something that I've learned on my own skin, in my hard-earned capital. So I can tell you that easily and honestly. And so that's it. Now, though, we have to keep following what this market is telling us, what the participation is telling us. Is it true that there was participation at this 74.26? Can you negate that? Look at that. The market got into that level, and bam. Yes, you can invoke news, you can invoke FOMC, you can invoke whatever you want. But the reality is that that market has bounced from that level. All right, and the opposite could have happened, and that has not happened. So this market, for me, until proven wrong, this market is going to 0.78. If you are in a long, by all means, keep it. All right, and something similar happened to the Australian dollar Japanese yen. The only difference is that an inner measured move has traded, and it has traded at the same time, but the move, the anchor was different. Okay, but it traded at the same time. That's exactly the same trade there, with the difference that the Australian dollar, it's much more stronger on the of course, on the US dollar, that it is strong on the Japanese yen. In fact, when you compare those two charts, you can see that. And it makes sense, because unfortunately, or we should say, according to our projection, and this market is moving lower before giving us an opportunity, and this is unfortunate here, but we got a very good trade at 121 into 113.40, 114.10, and my hope was that we will get a retrace. As you can see, I don't know who of you last week has mentioned that article from the three biggest bank in Japan that would have allegedly say that the move lower in the move higher in the Japanese yen was ended, was finished. I don't see that, and price actually has printed lower low. So Todd's asking, do Aussie and Kiwi closely correlate? Sometimes they do, sometimes they don't. They have similar economies. Probably the Australian economy is more linked to commodities, while the New Zealand economy is more linked to agriculture. The point is, do we care? Todd, sorry for being direct and blunt. I mean, I don't mean to be blunt, but the point is, sometimes these markets, they move together, sometimes they don't. And probably a good benchmark is given by the Australian dollar and New Zealand dollar, which puts these two in direct comparison here. And so if these two markets would move together, we would see, we would see an Australian dollar and New Zealand dollar would actually be a very, very tiny, very, very, of course, not a straight line, but we would see more contained price swing here in this Australian dollar and New Zealand dollar. That's not what we see. We see a market that sometimes, two markets that sometimes are moving strongly in different directions, and this is what this chart is saying. So, Todd, in general, is I would say like every correlation changing times, and as I say, nobody's sending you an email when a correlation between two markets changed. Now that said, do we really need to know the correlation? Because what we really need to know is what these markets are trading. Is there any participation on the long side or the short side in the different time frames? And if so, where is the participation? In which time frame is it long, in which time frame is short, and so on. So to me, and that's my personal view, no mean to be and that's just the way I look at trading, the way I look at this market, is that we don't need to know the correlation. Plus, see, the correlation, it's not different from an indicator. When you add a correlation, you add an element in your trading that you have to reconcile with price. So you have to make some considerations that allow you to gather information from what the correlation is telling you. And I will go even further. I will say that it's easier to gather information from an indicator, which is a number, which is objective, provided that you have tested all the possible outcome of the indicator and you have reconciled it with all the possible ways the price can move when that specific indicator gives that specific reading. Now, a lot of people do not realize that even in one indicator, the amount of work that you have to do in order to really create a solid system that allows you to get one decision, clear decision every time, it's very, very complex. Now you are telling me, Giuseppe, instead of considering an indicator, I want to consider a correlation, which is a concept that yes, can be expressed mathematically. Correlation can be, it's a number between 0 and 1. Actually, we should say -1 to +1. And for example, the correlation between the equity indexes in the world, it's +0.92. It means that they almost correlate 1-to-1, which means that there is only a factor of proportional factor between those. Of course, it's not 0.92, so it's not only a factor, but it's also an actual change in price shape, if you wish. So I hope this gives you, a little bit of what I think about it. And by no means, I always say that more power to you if you're able to, systematically include in your trading consideration on correlation that do not change and allows you to take the best decision you can. I always lean towards technical because it's objective. It's something I can see, something I can touch. I can see the participation at a specific level, and I can use the FibStalking timing to decide whether to enter or not. Okay, so the short answer is sometimes they correlate, sometimes they don't. All right, so let's do a quick time check here. It's 7:42, so I will start a recap of this session right now. And as we analyze this market, we started from the SP 500. We mentioned the fact that this market has reached its second target as we were anticipating. So this market is firmly trading in extensions here, and it reached the first target, profit taking there, profit taking to the second target. Where this market is going, this market is continuing higher, and it's going to continue higher until the sequence holds. So the next level where we're going to see this market participate is going to be potentially, is going to be 2017, okay, for a continued push higher into, again, 2056 and 2060. We then had a look at silver. We said in the last few days that silver has to do some catch-up work on gold, and indeed is doing it. In fact, when we compare this with the chart in gold here, we can see that gold has been, of course, moving higher, and this price data here is not correct of this bar, but don't worry about that. That'll be corrected in the coming days. But we know what gold is doing, and it keeps moving higher. But silver, at least today, had a stronger relative force. Where is it going? Is it going to 1660? Made no mistake about it. Its previous highs, it's going to encounter some resistance there, but that's where it's going to go. USD under US dollar, congrats to all of you who kept the trades. This was exactly 22 days ago, 22 sessions ago, so exactly 1 month ago. But here we go, first target, and this market can continue higher as well. It has weekly support, long. There's no reason to short this market. Same situation, opposite situation of the US dollar, Canadian dollar. And you're very welcome, Todd. I like your line there. I love your honesty. So, I'm stopped out as well. I mean, don't think that it's all good, but I think I've showed that the majority of cases, this is bringing good gains. And for anyone who wants to get the first two months on one of my accounts, I mean, just write to me. I'm going to send you the extract from Pepperstone, and you can see that. So this market here, we had a continuation lower, and we knew about it because the market was extended, and we knew already this level here, and that modeled exactly to the pip the next continuation lower. In the Canadian dollar, we're moving to 130 and 128.80. And we touched on a number of other markets here, but I think we touched the main points. We didn't have a lot of time to review the euro, and that's my bad. Sorry about this. And let's review the euro. And the euro, you remember, has been skewed by this ECB decision last week, where we were looking at in the euro was a short. The short worked in the morning of the US session, and then when Draghi came in, he reversed the whole situation here. The market came for a test for a level which is a very, very odd level, and I had problems identifying this level. In fact, I could only identify this level after the fact. I never traded this long here. Impossible for me, at least impossible in this specific configuration of price. Yeah, and then I realized that for some reason, which I don't know, for some reason, the algorithms have attached themselves to this level here. And don't ask me why, because I don't know. This is not typical. I mean, we can anticipate very often these levels. I was not able to anticipate this level, so peace. But the good thing is, though, that once we know this level, now we can continue tracking this market. So we know that this was the first target, and this is going to be the second target. And if the market gets to that second target, stay with me. Come here next Sunday, and I'm going to tell you how we can keep playing these markets higher. All right, so I hope you enjoyed this session. I hope you have an idea of where some of these markets are going to go, and I also gave you some setup. You can test them, and you can the way I test them, it's using the FibStalker timing technique, which is a procedural technique that uses these sequences on a smaller time frame to basically test whether there is participation from the larger time frame or the smaller time frame keeps actually pushing in the direction of the reaction. So pound New Zealand dollar, sorry, Miss Shari, won't be time to cover that. I'm always out of my time, but I promise that I'm going to cover that on Sunday. Okay, I will prepare it on my chart, and I'm gonna cover that on Sunday. So sorry about that, but I hope you understand. It's been a tough day and a tough week, and it's not finished. But typically on Friday is very light for me. But I promise I'm gonna cover this on Sunday. All right. For my student, I'll see you tomorrow morning at the US session. And thanks a lot for being here. Really appreciate that. If you like my work, just tweet about it, and let's keep this show growing and having more questions as well. I'm always happy to answer. I drove this session a little bit more just because I wanted to show some of the things that I didn't show yesterday. But typically I get your ideas, as you know very well. I get your ideas, and I want to be useful to you as well on the market that you are currently trading. It might be different from the market that I'm currently trading. Okay. So thanks, Mishari. I appreciate your participation, and I want to say hello to Mishari, Marco, Todd, Dion, IBY, Lebe Lopez, DZ, BW, John, Mauricio, Mark, Jax, Adinda, Femwan, Pan Pankai, Nas, Pantelis, Lee. Hi, Lee. And thank you very much, and have a great weekend. I'm going to see you on Sunday, 7 p.m., and we're going to cover a lot of opportunities for next week, promised. All right. So thanks a lot, and see you on Sunday. Bye-bye now.